Hey everybody, this is Jaime.Phillips with the Johnson Group by EXP, again in Richmond Hill, outside Savannah. It always starts all the videos with the same thing. That's mainly for the new viewers because one of you smarty pants posted something the other day. So, with that said, today we're going to talk, of course, about another loan product, or at least I call it more of a loan process. And of course, I have the subject matter expert here. We have Jessica with us again. So this is mainly for my military personnel, but it kind of applies to civilian personnel as well. We're going to talk about the VA loan assumption. Okay, to all the realtors watching this, everybody's making this face because we're all not crazy about this. Not because it is a bad thing to do, it is because it's very time consuming. Okay, so it's not a bad deal. Especially in these times, interest rates are not as low as they used to be, and you might end up getting a better interest rate. It's just it comes with a lot of work in order to process this thing. So my advice to you is check with your realtor first, and be patient. That's probably the biggest advice I can give you because these things take a long time, and it takes a lot of planning to do it. But you can actually find one, which is the hardest part of the whole deal. I think it is hard to find them. Not a lot of people wants to wait 90 days up to 6 months to do a closing. So when we want to sell a house, we want to get paid as soon as possible. You know, the old adage, time, money, right? So with that said, let's dig in on this and see what we have, okay? And to all my realtors out there, shh. All right, so Jessica, what is a VA loan assumption?
So a VA loan assumption, military borrowers probably know what a VA loan is, but it's a loan product that's specifically for our military vets, active duty, retired, disabled, but a military product for veterans is a VA loan. A VA loan assumption is for somebody who has currently a VA loan on their home and they want to sell their home. They can use an assumption for the next buyer to assume the loan that they already have. So they can assume that VA loan that's already standing on the home for that vet.
All right, so again, sounds great, right? So it is a good thing, but you have to be patient. I'm talking like Jedi patience. All right, so what are the requirements?
So the requirements are you have to qualify for the loan just like you would any other loan. So we're going to look at it to make sure that you could qualify income-wise, credit-wise, everything like we would a normal buying process. We're going to make sure that you qualify for that loan that you're going to assume. And I say we, but actually you're gonna go through that vet's lender. So you're gonna qualify for the loan that they have based on the terms that they have. So the loan amount that they have outstanding, the rate that they have outstanding, the payments that they have, you're going to assume exactly what they have. So that's gonna be the first step, is you've got to qualify for that. Other than that, you actually don't have to be a veteran to qualify. It can be any borrower that can qualify for this product that you're going to assume from that vet. That's going to be the biggest thing, is you just have to be able to qualify for the loan that you're getting.
Okay, great. And okay, so from the buyer side, okay, what are the pros for this?
So for a buyer, your pro is going to be, the biggest pro is going to be, you're probably going to be able to assume a lot lower interest rate than you could get currently. We've got some VA loans that are out there that are in the 2%, in the 3%, maybe even in the high 1%. So there's some really good rates that are out there that you may be able to assume. That's going to be the biggest benefit for the buyer, is being able to get into those lower rates.
What are the cons as a buyer?
Cons as a buyer is going to be the length of time. So 3 to 6 months typically, really just depends on the lender that the vet has currently and what their procedures are for that specific assumption. Another con is going to be that you're going to assume the loan that the vet has currently. So let's just say, for instance, the vet wants to sell the home for $300,000. their loan currently is for $150,000. Well, there's another $150,000 gap that's out there that you're going to have to pay that vet for to make up for the sales price. You can't add that to the assumption because you're only assuming that loan. So for a con for a buyer may be that you have to come up with a big down payment like that on your own in cash, or that you may have to go out and get a second lien to make up for that difference if you don't have that amount of funds available to pay on the difference for the purchase price. That's going to be a big con.
It can be pretty expensive.
Yeah.
Okay, from the seller perspective, pros, cons.
Seller perspective, a pro is going to be you can advertise that you're going to let a borrower assume this low rate, which is going to attract some new buyers for you, I would think. So that would be a good con. A good pro. Yeah, a good pro for the seller is that you can advertise that this is available out there for you. A con for the seller is going to be, again, length of time. It takes a long time. And you may have your entitlement still tied up to the loan that you've got that you're letting somebody else assume. So.
Okay, let's talk about fees. Everything comes with a price.
Everything
so
comes
what
with
are
a
the
price,
fees
yep.
on this?
So when you do a VA assumption, you're going to pay a 0.5% VA funding fee to the VA to do this assumption of this loan. So 0.5% of the loan amount. You do have to pay that as a closing cost. It cannot be rolled into the loan like other VA loans. You can roll in the fees, some of the fees. So that's going to be one of the fee that goes along with it. And then from there, you're going to have some sort of closing costs like you would when you do the assumption, just like you would when you do a purchase. Usually not as much, but it really depends on that lender that you're assuming the loan through and what kind of fees they charge for that.
And like everything, because I know some people aren't, I'm a veteran, that's the reason I know this, but who's exempt from these fees?
So exempt from these fees are going to be people who would normally be exempt from a VA funding fee, which would be if you have any kind of disability rating, different reasons like that. When we pull the certificate of eligibility, if we see that exemption out there, then that would also apply for the VA assumption. You would be exempt from that fee for that.
Okay, and I like telling people things from our experiences. I'll let you say it first and then I'll say my part. We keep on saying from 90 days to 6 months, the length of time to do this. Realistically, like from experience, how long does it take to do that?
Most recent one I've seen go through was about 6 months. And it is different because different lenders have different types of approvals through the VA for these assumption rights. Sometimes they can do it in-house. Sometimes they have to go to VA and get a prior approval for this. So it just depends on the lender that you're going through. You do have to go through the lender that currently has the VA loan outstanding. So if they have, whoever it is that holds that VA loan currently is the lender you have to go through, and you have to follow their rules. You just have to go through their guidelines. They're usually not in a huge hurry to get these things done. So quickest one I've ever seen, 60 days. The most recent was about 6 months.
Yeah, from my own experience, you don't see these ones very often either. So at least in the amount of time that I've been a realtor, I only done one, and that took about almost 4 months. Okay, so you have to be very patient on this. My recommendation would be, because one of the hardest part of these things also is to find somebody willing to sell their house like this. So that can be a very time consuming too. So that's something to keep in consideration if you're planning to try to acquire one of these loans. And time is a big one, I would say, plus all the paperwork that comes with it too.
Let me just add in there also, the vet that has the current loan has to be current on their loan when you go through this assumption process. So they can't be late on that payment. And as you're going through the process, they can't stop making that payment and become late at any time. It has to be current as you continue to go through the assumption process.
That's a good observation. Thank you for that. All right. If you all have any questions, and I'm sure there's got to be people that has questions about this, because every time I bring this up, everybody goes, ooh, lower interest rates. It comes with a price. The price is time and your patience, okay? And other than that, if you have any questions, please feel free to ask us at any time. We'll be more than happy to answer your questions. Just leave it on the comment section and we can get back to you. And in the meantime, the same thing that I say every time, subscribe to the channel or follow me, either or. With all that said, thank you so much again.
Thank you.
And you all take care of yourselves. Bye.
Thanks. Bye.
And